Friday threw everything it could at this market. GDP missed, inflation came in hot, tariffs were ruled against but will be put right back on in breaking news at 15% instead of 10%, and yet none of that actually matters right now. You see, what happens this Wednesday could make everything else irrelevant. We're headed straight into what I'd call the most important week of 2026, and it all boils down to one earnings report: NVIDIA. As mentioned last week, semiconductors still have the power to make or break this market. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt. If you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 7 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame, talking about candle structure and location, as we always do. In terms of structure last week, solid green-bodied bar with a very impressive close from the buyers at the highs of the weekly range. However, what I'd focus on is actually the lower wick. What it tells us is that sellers did actually attempt to move prices lower, and they completely failed there. And failure is the name of the game on this weekly timescale. It's actually the theme of this chart. So let's take a look. If you look at the previous week's low, we technically made a bar-to-bar lower low. Were sellers successful in advancing price meaningfully underneath? I would say absolutely not. Did we move underneath the weekly 20 SMA? Yes. Did sellers keep it there? Absolutely not. Another failure. If we take a look at this level, which is 686, we've been talking about this for a while, we opened well below. Could sellers keep the close below? The answer is absolutely not. If we break out the Fibonacci's, let's just get crazy with this thing. Let's just go straight into it. Here we go. We'll talk trend in just a second. Did we move under the Fib 38.2? Survey says yes. Did we close below? Survey says no. Another failure for the sellers. Let's take those off and let's throw on the anchored view apps from a weekly perspective. Did we move into the stack here? Yes. Did we close below? No. We even closed over the breakout anchored view app from back over here. What about the high volume node? Let's just go through all of these before we check in on trend. As you can see here, let me even zoom in on it a little bit. Here's the high volume node. Did we close underneath that level? Survey says, once again, absolutely not. So the theme is that the sellers failed in a major way. Does this automatically mean that, oh my goodness, I'm looking for a huge breakout to blue sky territories? Probably not. I'm still of the mindset that this is still a weekly balance range until proven otherwise. If you watched last Saturday's update video, you know that we actually talked more about looking for a range low support versus a breakdown first, but we're open-minded to the breakdown actually taking place if we got the daily lower high. Well, what you could see here is that we just bounced off of range low and we're currently in the midpoint of the balance range. Therefore, if we come into the top end of the balance range, because nothing has really changed yet, and I would put a caveat on this, of course, this is happening ahead of Wednesday's NVIDIA earnings report. But ahead of Wednesday, if we rotate to the top of the range, what would I expect there? Probably some degree of a pullback for mean reversion towards 686, right? So the trend on the weekly timescale is still neutral, but the sellers had an opportunity on Tuesday's open of this week, and even early in the week on that opening drive lower, to flip the trend down, right? We talked about how this was potentially a weekly double top. Here's your neckline. Sellers made the move to and slightly through that neckline from back here, but were completely unsuccessful in moving prices in the downward direction, which means that the weekly trend remains neutral. And therefore, as I've already said, I will remain neutral in my stance and likely look for a range high fade if the market rallies to the top end. Let's take a look at the daily timescale and see what's going on from this perspective. And the first thing we'll evaluate, as always, is our weekly expected move. So that, of course, is this gray shaded area right here. If you're not familiar with this study, check out the video tutorial in the top right-hand corner. If we're contained by the upper bound, the number is going to be at 703.11. And that, of course, is a new all-time high. That's a higher high in the trend count. That, of course, is bullish. If we're contained by the lower bound, the number is 675.75, and that's an equal low to what we had last week. That's a little bit more neutral. So neutral to bullish in the range still is what the expected move is suggesting. If we're thinking about the overall trend here, it's still balanced on the daily time scale, but we should probably read into this idea that the lower high here is not particularly developed, right? On the Wednesday session, the upper wick rejects the daily 20 SMA, the daily 50 SMA, and closes right on 686. All Thursday, we consolidate underneath 686 and those two key moving averages. And yet, can the sellers step up for a move back down into the range low? Survey says absolutely not. And let me just remind you one more time that if the market had sustained a meaningful lower high here, and if we had reattempted the bottom end of the range in short proximity of time from here to here, the odds would dramatically increase for an actual breakdown of this range. It's simply not happening with Friday's rally back in the upward direction, as you can see, reclaiming the weekly level, reclaiming the daily 50, the daily 20, and we can also talk about the potential for a rough follow-through day. Now, I'm not an expert in IBD and exactly how they want to classify things, but typically what we're looking for, right, loosely, is day 4 or beyond, after some sort of meaningful low has been set, you want to see a 1% day plus on a meaningful uptick in volume. So let's say volume over here. So do we have these things? Check. We did make a move over 1%. Do we have meaningful volume, meaning higher than the prior day? Check. Yes. Now this is where it gets a little tricky and a little bit unconventional in my view. You could label this as day 1 attempt. This would be day 2, 3, 4, and now we're clear for a day 5 follow-through day. Or if you count from Tuesday, and a shout out to Double Wide over on X, but because we swept this low, the count restarts here. So we have day 1, 2, 3, this is 4. Now we want, and beyond, another one of these situations, an increase in volume and a 1% plus up day, and that starts to mark the low end of a rally. So I would call it a quasi follow-through day here. More importantly, I'm interested in the reclaim of the daily 50 SMA and the potential for, if we do rotate to the top end of the range, let's say we get a mild pullback, I would invert the same exact thinking as what we were describing over here. Just like the lower high, if it stuck, would increase the odds of breaking through the bottom end of the balance range if we retested in short proximity of time from here to here. The same thing is true on the top side. If we make the attempt up to the highs, I would expect backing off first, and then any kind of higher low attempt over this weekly pivot, this 686, this higher low back into an equal high would increase the odds that we could potentially break out here. Now again, caveat, this is likely to happen, or at least I would maintain this stance, I should say. It doesn't have to happen before Wednesday, but I would maintain this stance ahead of Wednesday, and I'd be very open-minded Wednesday after hours to whatever NVIDIA does, the market will follow, right? NVIDIA is still the heaviest weight component of the S&P 500. So with that sort of consideration here, my top priority for early in the week ahead of earnings, do we hold over 686 and do we take out Friday's high? If we do, rotation to the top end of the range. If we're here by Tuesday ahead of NVIDIA earnings, I would look for a fade off the top end of the range for a pullback. And then the wild card sets up after the close on Wednesday. We'll watch NVIDIA earnings all together here on the channel. We'll do another live stream, watch party, whatever you want to call it, after the close Wednesday. We'll probably start at 350. We'll get all the earnings numbers out and sort of just take a stance on whether or not, okay, NVIDIA is going to be helpful or harmful for this market trend development, right? That's what I'm seeing on the bull side. If early in the week we reject here and we're trading underneath 686, the key flush point I would watch for is at 682.35. If we break below 682.35, technically speaking, this will still look like a lower high. This will be a failed follow-through day in the upward direction, quasi follow-through day. And what are we sort of expecting? Well, at range low, anything that sort of even, wavers even just a little bit out of NVIDIA earnings, sayonara, this market's going to give it up, and I'm likely thinking that we move lower there. So, as of right now, neutral ahead of Wednesday. Wednesday's the wild card, and we'll see if this follow-through, quasi-follow-through day can actually mean something for the market if we get continuation over its high early on in the week. So, if I had to boil it down to 3 key levels on the daily timescale, Friday's high, 689.75, the weekly midpoint at 686, and these 3 equal lows here at 682.35. If we open above, bullish, looking for this, and then fade as mentioned. If we open below, okay, danger, pressure is on underneath 682.35, equal low reattempt, and this still sticks as a lower high. Let's drop it on down to the hourly chart. Let's take a closer look at the price action here. Once again, put yourself in the shoes of a seller. Tuesday on the open there, not bad. You're still technically underneath that weekly inflection point. You still have the opportunity for an hourly lower high. And then on Wednesday, it gets blown out. Now, on Wednesday, you also close back down here, and then Thursday's consolidation underneath. Again, put yourself in the shoes of a seller. You're probably like, okay, not great, but still doing all right with the sell side move, with the short, and then Friday completely blows it out, right? Friday is the day that kind of unwinds and proves the failure of the sellers, unable to hold a lower high underneath 686. And the reason we talk about this, right, is to judge the type of participants that we have in the market. Are they strong sellers? Well, not really. If they were, they probably should have had a lower high here. They should have had a lower high stick on Thursday. And then on Friday, if we opened here, this would have been the outcome, right? If we had stronger sellers. Now, are they overly convicted buyers? Is this, oh my God, the market's going to rip and roar to brand new all-time highs in the blink of an eye? Probably not. Otherwise, I would think on the Wednesday session here, you would have gotten a higher low on the first go-around. Thursday could have consolidated here, and then Friday's breakout could have been more meaningful. So I'm still getting that neutral stance in terms of types of participants in the market, which aligns with kind of what I think the price action is just telling us, that we should remain cautiously bullish here. Very, key emphasis on the word cautiously. A little bit better over the 20 SMA, working our way back higher, right? So the pathing is going to remain the same. There's no real reason to rehash it on the hourly chart, but we can come in with some fibs on the hourly and just remind ourselves, right, that these levels are kind of spot on here. If we're over the fib 61.8, this would dramatically increase the odds of the 100% retracement. And if we start to fail underneath these lows here, which this is not exact at the 38.2, but if we're under the 38.2 and breaking the multi-day low at 682.35, it would just align with the idea that, yes, we're back in bear flag consolidation in terms of the overall range, or you could even just say in the lower third of the range, right? Let's clear that up and let's hit it with the intraday anchored VWAPs and see what we have from this perspective. We've cleared the entirety of the stack, which once again, not that I want to be more bullish than I should be, but being above the stack is slightly more of a bullish data point. That's really as simple as it is, right? Anyone who bought off the low on Tuesday feels pretty darn good, right? The average price, we're above that. And anybody who even bought from back here is still technically back above water if they're still holding this. Not that I think it would have been responsible to do so, depending on your time frame, of course. But nonetheless, the average participant, the average price that's been bought through here, you're back above it as of Friday's close. So cautiously bullish here. And I would just continue to sort of reference this idea that cautiously bullish is not the same as, oh my God, we're going to rip to brand new all-time highs. Cautiously bullish means I could easily change my tone right back underneath this level. The anchored VWAP stack is above us now, and suddenly this puts us at the back of the range, right? I could easily see that stance coming right around the corner. Like there's really no point in being overly committed directionally in the midpoint of this balance range, which once again, I know is not the answer that many people want to hear. I think that there might be a small, like tiny incremental bullish edge just based on the failure of sellers to go lower, but it is exactly that. It is incremental. It is not a huge edge for those bears. Let's take a look over at the market internals for the NYSE side of things. If you're not familiar with the internals, check out the video tutorial in the top right-hand corner. What do we see going on here? We've got ourselves not really solid bullish inflows on that Friday session. So I would make note of this as being a check mark for the cautiously bullish stance, right? Same thing with volume flows. They were not like gangbusters. Sorry, this is volume flows. This is advanced decline line. AD line is not gangbusters up here over 1500. Intraday index score, yeah, nice and strong because a majority of components were rallying that are heavyweight for the broad market. And we know that the MAG 7 performed really well there on that Friday session, up over 2%. If you look at the cumulative build on the tick, you probably would have expected a little bit more of a bullish build here, considering the engulfing bar. It's not a perfect engulfer if we just go back here. It's not a perfect engulfer. You did not open underneath the prior day's low. You did not test under the prior day's low. You certainly closed well above, though. You would expect with that action maybe a bit of a stronger cumulative build and a stronger tick, and you just didn't quite get that. So are these data points reeling me back in a little bit and saying like, hey, just cautiously bullish in the midpoint of the range? Absolutely, right? Let's jump on over to the market profile and see what we can glean from this perspective. If you're not familiar with market profile, check out the video tutorial in the top right-hand corner. What do we see? So on the Friday session in particular, value did shift higher in that session. It was not left low. You can see that value is over the Thursday session, and it's unchanged basically from that Wednesday session over here. So as of right now, markets are trying to make an advance, and we're not leaving value lower. If we did have this build out of like a huge amount of volume down here, but still a close that was way up here, that'd be a disjoint I would make note of, and that would be a little bit more bearish, right? You should have that sort of magnetic pull back down towards value area, and that's not the case. So markets are telling us that there's some degree of acceptance in this midpoint of the range and not a lot of acceptance on the low end of the range. Notice how value on Tuesday was not able to stick low in that general distribution. Now, I will say here that we have a mechanical low with almost a perfect double bottom, flat across the lows here at 68.47, let's call it. If the market was to revisit that level, I would expect it to break, and then we have to learn something when and if we come back above for look below and fail, or if it's successful underneath and we get something that looks like this, that tells us much more, and okay, let's start to gear back up for this, ultimately just yielding a lower high near the moving average stack. The equivalent on the SPY daily would just be this, right? We come back down here, we look below, we stay below. Ultimately, this is still just a lower high against the moving averages, right? And this would unwind sort of the progress that was made on Friday, as we're saying, the quasi follow-through day. All right, so that is the S&P 500 side of the market. Let's give this a reset. Let's hit the QQQ on the higher time frame weekly, and let's see what we've got going on over here. Let's just go ahead and flip the study set as well. There we go. That's looking pretty good. So on the Qs, it's not quite as pretty of a picture. Now, I will give credit where credit is due. Candle structure is just like the S&P 500, bullish, with a solid green-bodied bar, strong close near the highs, decent little lower wick. And I would say the same thing about the failure to go lower underneath the previous week's low. But the difference here is that buyers could not retake the daily, or sorry, not the daily, but the weekly 20 SMA. We're still underneath a majority of the overhead supply. It's not quite as bullish over here, right? So another data point jumping over to the Qs to neutralize the stance and not get more bullish than we should in the S&P 500, noting that the NASDAQ in the weekly view is technically still in a downtrend, right? You're in a downtrend here with lower lows and lower highs underneath the weekly 20 SMA. Let's come in with those same Fibonacci pulls from here up to the top, and this is basically the same exact equal high from off to the left. Notice that we are underneath the Fib 38.2. We tested under the 61.8, so you might say something like, okay, the sellers didn't clearly run away with it for the full retracement down to here, but they also didn't, they didn't give way so much to the buyers where, oh my goodness, it's looking primed for a breakout, right? Let's clear that up on the fibs and let's check in on the anchored VWAPs here. You can see we're still underneath a majority of this stack in here. That's not really a compelling look at all. This means that this is a strong wall of resistance here for potentially just a weekly lower high, right? That's absolutely on the table. Let's take a look at the high volume node from the QQQs. Let's jump into that weekly volume profile, zooming out here. And what do we have from this perspective? So if we just extend this one off to the left, we're underneath. If we extend this one, that's kind of where we bounced from. So if you want to widen and broaden the weekly balance and say it's something like this, you might be neutral there on the high time frames, but in the short time frames, let's just drop right now to this daily chart of the Qs. And let's take a look. I mean, it's not really looking great still. I mean, we have similar components to the S&P 500 saying that, okay, maybe this is a follow-through day up 1.45%. We did see an increase in volume versus the prior day. You could see that we have day 1, 2, 3. This was day 4, right? But I can, and I think it's quite clear on the chart, but I can't quite be as bullish underneath the 50, underneath the 20, underneath the overhead supply we were just talking about. The weekly expected move is not even close to suggesting a new all-time high. The number there is 624.05. The number down here on the bottom end is 593.57. It's kind of just an equal low, and you could say a higher high from here to here, but generally not even close to that all-time high, right? So my main line in the sand is to start treating this as a bit of the range on the Qs, the developing range, and this is a bearish development of range. Of course, you could do something along these lines, break out a fib from the top down to the bottom, and note that all of this is happening under the 61.8. Most of it's happening underneath the Fib 38.2. If we just kind of reject in this area, it's a 20 SMA rejection. 613 is still that key level. I think the argument is pretty clear as to why this is not nearly as bullish as the S&P 500. Sure, you're bouncing off of some prior lows from here, some prior lows from in here. I just don't really have that same sort of confident stance that, okay, there's the opportunity for something like this and it's going to be fine and dandy to all-time highs. Don't get me wrong, I'm not going to fight it if we just see a bar on, let's say, Monday or Tuesday that looks something like this and we're holding up over that 613. Maybe we come into the Wednesday session for some kind of move higher, and then if NVIDIA earnings are great, no reason to overstay the bearish welcome underneath 613, but you've got to see it to believe it. And I don't quite see it yet, right? Being underneath that 613, which has kind of been the neutralizing stance of the entire S&P analysis. So with that, let's drop it on down to the hourly chart here and see what else we can glean from this perspective. Once again, like if we had stronger sellers, this likely could have been bear flag consolidation here and then some sort of extension to the downside. Didn't really get that, but the bullish, attempt higher also wasn't all that severe, right? You moved through the single prints in here, you closed them up a little bit, and then just started to back off into the close or afternoon even of that Friday session. You're under the moving averages. I feel like a broken record at this point, but the idea just is that, sure, you're starting to build a little bit of an hourly uptrend here with higher lows and slightly higher highs, but what do we know about how trends work? Well, the hourly trend actually needs to flip to up if this is going to be a firm lower high on the daily time scale. And then when and if there's an hourly trend reversal back to the downside here, your daily lower high is confirmed, equal low reattempt, and then everything we just talked about in the S&P 500 about increasing the odds of going through, it still rings true here after this lower high, let's say increased odds of getting a lower low, right? Down on the bottom of this cycle, down over here. So that is still absolutely in play. So that's the take. Let's take a look at the intraday anchored VWAPs on this side. Notice that we are not over this anchored VWAP from back over here, unlike the S&P over the entirety of the stack. I will give some credit for a possible hourly higher low in this zone if we consolidate here. Maybe there's some attempt back into the moving averages. And then what we'll probably start talking about on a sort of daily timescale is this going to be a double bottom, right? I don't want to jump the gun because we're not even at the neckline yet at 613, but if the market starts to do something like this, a retest over that neckline, reclaiming the moving averages, let's just say, hypothetically asterisk here, NVIDIA does well through earnings, I wouldn't really fight this outcome, right? If asterisk, please, asterisk, if NVIDIA does well through earnings, then fine. Right, we get some sort of constructive move back into the overhead range and just sort of balancing around up there. Again, my first thoughts would be, okay, if this does happen, just to speculate here a little bit, my first thought would be, okay, this should likely pull back off of this level, right? If we were to get something that looks like this, bearish consolidation, I would look to go through and then I would look to bounce, right? Especially noting that the S&P 500 is still showing some signs of kind of neutral, right? If this gets like this, my first thought here is not that you're going to get smoked through the 200 SMA on the first go around. You'll probably get some sort of counter trend bounce. Again, unless, like, caveat there would be if NVIDIA earnings are just the ugliest thing in the world, if they miss, if they sort of offer negative forward guidance, not that they would like revise to literally negative, but if it misses expectations, yeah, I mean, you could probably see a move to or through the 200 SMA here on the daily time scale. So that's pretty much my take. It's that the NASDAQ is still way more bearish than the S&P. The S&P is not really looking like it's ready to give it up quite yet. I think the sellers failed in a big way, as we've mentioned already. Let's not get too sidetracked from that NASDAQ interpretation and take a quick peek over at our internals on the NASDAQ side. What do we have here? So again, not like the strongest look volume flow wise on the Friday session. Advanced decline line hardly closes positive, and you still have a bearish build on the cumulative build from the ticks down below. It's not enough, and I hope I hope I've been very clear, and I hope nobody's really getting hurt in this balance range. If you've been tuned into the channel for the last little bit, you can kind of hear in my voice and just the way I talk about this market, there is like low conviction inside of this balance range, right? And that remains the case as the NASDAQ looks weak, as we are getting low conviction out of the market internals, as we take a peek over at the market profile. What do we see going on over here? Just taking a quick glance. I mean, you get a little bit of a P-shaped profile on that Friday session, right? So maybe some short squeeze in A period, ripping prices back higher. Poor high at the high of day, and another poor high from back here. It's technically repaired, but if need be, repairing that to the top side probably just gets us closer to what? Well, if we just go back on over, we know that repairing that high just gets us closer to the rejection point at 613. So the pathing there, I'm not sure that I was too explicit in my pathing, but what I would be looking for this week is, do we rally and reject 613, in which case looking for downside here, Brigade bolt back below gets you to these three equal lows, consolidation, and then, right, we're just looking at highs, lower highs, lower highs, and lower highs. It's pretty straightforward. If the market's going to be sort of consolidating here and attempting to Brigade bolt over the 613, over the moving averages, probably not all jazzed up about, full portfolio long, oh my God, we're screaming a new highs, but I'll give this the respect it deserves if ultimately this is going to be that double bottom on the daily, and probably look to see if NVIDIA earnings can confirm this via a positive result. And remember that I know it seems late in the earnings cycle already, but all the prior Mag 7 earnings, really strong numbers punished by the market. Right? So is it going to be any different for NVIDIA? We shall see ultimately. But that is the big wild card on Wednesday. So I think you got a lot hanging in the limbo there on Wednesday. Let's just quickly jump back on over to, let's go small caps and finish up this broad market. Let's keep this thing moving and see what's going on here from a weekly perspective. Let's just clean up the drawing set and do a quick little shift as follows. Perfect. Thank you. And what do we see here? A little bit different. It's not as strong of a green-bodied close. I mean, it's a green-bodied bar for sure, but you've got yourself a large upper wick, a large lower wick, more of an indecisive doji. Notice that we've just got a purely inside bar with a higher low and a lower high, and we're just kind of unchanged in the sideways balance range there. I still think that this weekly chart is very constructive for small caps with, you could really start from the major low in April. Lows, higher lows, higher lows, higher lows. This is easily building out soft higher lows and just well above the weekly 20 SMA. Flat top high breakout level is in play. If this Brigade bolts out to new highs, awesome. It continues to speak to the broadening nature of the market rally, which is technically bullish for like under the hood and preventing the S&P 500 from purely breaking down, but semiconductors, they hold the key. Let's jump on down into some Fibonacci's, if we will, From this low up to this high, still closing over the Fib 38.2. Of course, from this low to this high will be the same, but just noting that the consolidation from this perspective is still a bull flag there. Let's jump into our anchored VWAPs on the IWM. Over the entirety of the stack, looking pretty good on that front, and checking in on the weekly volume profile. Really have to zoom out on this one. It's kind of, I mean, let's go way out. We need, I think, 5. Let's go to a 10-year chart. The prior highs here, well above that. Like none of these pullbacks have even attempted this high volume shelf. If you look at this, kind of right where we closed, of course, it's just blue skies above. So there's inherently no volume there. There's no overhead to potentially get hung up on. Let's drop it on down to the daily time scale, going back on over to the IWM, and let's take a look over here at the expected move. The expected move high is basically right at the all-time high there. That's 271.64 technically, and if you look at the lower bound, it's here at 257.57, kind of just an equal low near that daily 50 SMA. There's a lack of trend here on the IWM. I would say that's very similar to that of the S&P 500. You're starting to really build out more of a sideways balance range here. Over the last 2 weeks, we've really talked about the fact that this was a look below and fail, followed by a look above and fail, and now we're just trading in the top range of that balance. So as long as we're over 262, I would continue to march along here with calling these and classifying them as higher lows. We should also be respectful of the lower highs, right? This is basically the premise of the inside bar. On the weekly chart, you could do this, and you could do this, and until we get a confident look of a Brigade bolt up and out to new all-time highs or down and out, I would say really underneath the daily 50 SMA. So that's going to be here at 258. Until we violate that level, I would just say that the market's trying to balance off some of the more recent gains, meaning this move here, in the small caps, which is completely normal, healthy, and fine for the broad market. Like that's okay for the market to go sideways. It does not need to be in a straight line all the time. Let's drop it on down to the hourly chart here and see what else is going on from this point of view. I would just note the couple of failed attempts throughout the week to get up and over the top end of the range again, range coming from back here. That defines the upper bound at 264.65. You failed to break through here on a meaningful momentum move early in the session Wednesday. Then on Friday with the tariff reversal, you also sort of saw volatility above the level that failed and closed right back down at it. So it's not really a compelling look for those buyers. I would say if you had stronger buyers, this should have been bull flag here. Tariff reversal then could have been like this. Into the end of the week, you didn't really get that. So for now, just don't overcomplicate the chart. Are we over or under 264.65? If we're above, great, that's bullish. This is your next Brigade bolt to close the gap and test all-time highs. Or if we're just here, that's bucko as we've been calling it. Bucko stands for bullish, BU, bullish. Consolidation, bucko. If we're here, I would start looking for the bottom end of the range, but it's really only bearish, like definitively bearish for a breakdown when you lose that 50. Right around in this area here at 258, right? That's the IWM. We could quickly hit it with the Fibonacci's. Let's just come in from this to this low, the local high and local low. Notice that the 61.8 and 38.2 are spot on the two levels we've described. That is fantastic in terms of confluence. And then if we hit it with the intraday anchored VWAPs, a little bit more arbitrary. I think that this one coming off the low is more the impressive thing. Generally, they're all tangled up at the same spot anyways. I think it would just reinforce the idea that in here, bullish over the stack, in here, bearish consolidation under the stack. Things get nasty when you lose that daily 50. I think that's fairly straightforward. All right, let's jump into the market internal side of the Russell. And what do we see on this front? Same story. I won't rehash everything. It's just pretty weak, right? Not a lot of follow through at the exchange level. And let's jump on over into our market profile of the Russell and kind of see what's going on from this perspective. Big B period single print shoot here on that sort of news catalyst volatility from the overturn on tariffs. And then value is kind of unchanged in this sideways range here, right? You could say here, I mean, if you split the difference between these, you're really just looking at unchanged value straight through the midpoint. And for now, that's not necessarily the worst thing in the world for the Russell. It's great excess on the highs and lows, no real poor inflection points that need repair. Auction looks pretty healthy here on the top and bottom side. Let's jump back on over to the platform and take a look at our sectors, which is where things get a little bit more interesting, just trying to gain a little bit more of an edge contextually for the broad market, right? If we think about who was winning, who was leading, who was losing, I guess winning and losing is the same, but who was leading, who was losing, and where was the weight? Semiconductors lead the pack this week, up 3.06%. And as mentioned, like you're not going to lose the broad market if semiconductors remain strong here, which is why it's so critical that we see NVIDIA. I would say they don't have to report killer numbers and like break to the upside. It would be helpful, of course. All they need to do is not fail. Like all they need to do is not break the major topping formation that you see there on the weekly, which we'll talk about. Let's just do it now, actually. So like on the SMH, just take a look at the differences between these two charts, right? This, equal highs coming in after these higher lows, building out an ascending triangle up here at the all-time high versus NVIDIA, right? You start to see this, as a head and shoulders topping formation where if earnings breaks the neckline, it's kind of going to be the nail in the coffin for the broad market, right? And we know that the AI trade is moving to other places other than just NVIDIA in its maximal concentration as it had been prior, but that's kind of the threat that I see. So the leadership here in semiconductors, it looks strong, but you just can't afford to lose NVIDIA. As long as NVIDIA doesn't go lower, I think we're all right, meaning it doesn't necessarily have to scream back to all-time highs. Let's go to the Mag 7, up 3.6% as well. You could see here XLC, so those technically aren't S&P sectors, right? They tell us about the nature of what's in the S&P sectors, but XLC does well. Communications are risk on. XLI, not really, overly risk on. It's not risk off for sure, but it's lighter weight, 8%. XLK does well, up 1.62% on the week. And then there's the benchmark at the broad market index. Just underneath is still financials green, up 1.3%, but the structural chart's pretty ugly. And then it's discretionary underperforming, right? The bottom of the barrel is staples, down 1.94%. Software is in there. Utilities is in there. Healthcare is down there at the bottom of the barrel as well. So checking the structural charts, we already talked about this SMH. I think it's fairly straightforward that, what you're looking for here is just Brigade bolt to new highs. That would be bullish for the broad market overall. You're continuing to hold the 20 SMA here. I mean, the higher low sequence is, I think, fairly straightforward under these last couple of sessions there. So no problems in SMH. Let's go over to the Mag 7. Strong rally coming off the daily 200. I still think that this is a big battleground and proving ground for the Mag 7. If you reject here at the 62.65, and I have to just from a trend perspective say, okay, highs, lower highs, lower highs. I mean, is it not reasonable to be expecting some kind of a lower high in here after coming from the lowest low? I think it's very reasonable. I think this is all overhead supply, right? So if you reject 62.65, if you can't really make it through that, I don't think this looks great for the broad market as a whole. So although I want to be kind of like bullish and, rah-rah about the S&P 500 going back to all-time highs and really getting in gear and the NASDAQ, all things firing on all cylinders, I don't know about you, but I'm just still seeing the threats. I don't fully see us as being out of the woods here. Now, as a caveat, remember, as a trend follower, instead of trying to pick the dead low, as a trend follower, I'll never get this low as the entry point, right? I will get something that's in here, but with a higher degree of confidence, right? So that's kind of just a caveat to keep in mind as I talk about this. If we go through, it's not going to be the end of the world. I'm not buying it there, but I'll probably be looking for the first higher low over the level if it sets up and is going to turn this around and build more confidence in the long direction, right? Let's go on over to the XLC. Let's keep this thing moving here. Strong up day there, of course, on that Friday session, up and out through these highs at the moving average stack. I'd be curious, does it set the lower high? Right? I would call this trend much more neutral. We didn't really go out to a meaningful new lower low. You could say lows, lower lows, lower lows, and highs, lower highs, lower highs. But for the most part, I'd be a little bit more neutral on the XLC. Let's go industrials. No problems over here. One of the cleanest trends in the market still. John Deere, what a knockout earnings report, or just at least the market's response to the earnings report. If you look at the XLK, it's no different than the QQQ. Still tracking these lower highs and the threats for lower highs. So again, I want to be bullish. You guys know me. I'm like the perma bull of YouTube, as they say. I just don't see the full bore evidence yet, right? We're taking a weight of the evidence approach. If you look at the XLF, I mean, a nice bounce near the lows, but still just kind of looks like a bear flag underneath the daily 200 SMA. Would I like to start saying, oh, look, it's a nuanced little higher low, and we're going to go, here, and it's going to be all fine and all-time high? Of course, I'd love to say that, but, for me, until we can at least do this, over the 200, over the 20, I don't know that I could side with financials being, massively bullish. And keep in mind, just as a reminder, this could happen in 2 days. This could be Monday, and this could be Tuesday, and this could be Wednesday, right? And then we're bullish here on the Tuesday inside day high breakout. That's a hypothetical. I'm just saying it can happen that quick. But for now, the evidence in front of me right now is that this is a bear flag under the 200. I just don't really know how I could get all jazzed up about that. Maybe you could say weekly range low support. Maybe. Let's keep going to XLY. Maybe the start of an inverted head and shoulders, but what's the same concept here? I mean, this is still just a lower high. So I might sound like a broken record all this video, but this to me is just, what it's all about is has anything materially changed other than a small pop on Friday? Not really. Energy's still ripping. It's a lighter weight sector. If we look at the XLB, it's the lightest weight sector. I mean, it looks great as a bull flag here. If you're trading XLB names in isolation, then fantastic, right? This is just awesome stuff. But Is it going to save the day in the broad market? No. It's like 1.5% of the S&P 500. Let's move on over to the XLP. It's a lightweight sector, but it also is D for defensive. This has been a defensive rotation this entire way. I mean, hammers there, possible higher low. So like flip the script. Just like we have lower highs in the risk on sectors, right? This is still, although it pulled back, although it underperformed on the week, I mean, it's not going to go in a straight line forever. You still have this opportunity for higher lows. And if you get this, it still just looks like money coming out of risk on and into risk off. Let's jump into software. I think software is like, I've been saying it, right? And this is not like a pat on my own back, but I still think you need to clean up the auction low at 79.65. I think you need to go lower here. I think you need an excess low. If we jump on over to utilities, this is defensive. What is this starting to do? I don't know about you, but like cup and handle, there it is. Consolidation over the break point of the cup, right? Over 44.90. I mean, this is certainly well above that. That's like defensive consolidation in my view. Even go look at some of the new like UTES, UTES is the sector here that we want to watch. And UTES has a little bit more of those modern utilities that are playing a key role in the AI infrastructure build out. I mean, breaking out there, that might be a little bit more compelling to say, oh no, it's technically related to AI trade. But even the more broad-based defensive utilities in the classic sense, this doesn't scream risk on. Let's go on over to XLV, healthcare. I mean, this is also technically speaking a defensive sector. If you do something that looks like that, it's a pretty straightforward trend line that's holding. You just got to break this. In my view, this is weekly cup and handle. It's been that way. I love the defensive hammer there. When I say defensive, I mean respecting the 20, respecting the 50, bouncing off of it, getting really tight in here. There's probably some kind of long in healthcare names, healthcare-related names, over Friday's high early on this upcoming week. Can you get some kind of bounce here up towards this little range high? And as we know, I'll just go there. Here's the weekly chart. I'm still kind of optimistic about this being cup and handle and potentially there into the highs, right? That's still a decent look on healthcare. If we go on over to the TLT, the long bond here, back to the daily time scale, a lot of volatility, of course, on the tariff decision there and commentary to follow on the Friday session, but nonetheless, still hanging out kind of at the same opening print of Thursday. So rates, they spiked, but they didn't, spike meaning this down move here on Friday, but they didn't really do anything that was all that insane. If we jump on over to the XLRE for real estate, you could see that it's reflected here as well. Rates have come in substantially. Real estate has broken out. Technically, you could think of hard assets as being defensive, but I don't really see that as being the case. In my view, I still just kind of see this as a natural progression of the look below and fail here. Right. So those are the sectors. I think primarily the posture here is that, we started to see some things perk up last week, but if I had to classify things in a major sense, they are counter trend moves in pre-existing downtrends, right? That is unfortunately my take through the risk on cohort. Let's take a glance over at the ratio charts, and I think what this will do is it'll make it even clearer to see, right? So the XLK was up towards the top of the list, up 1.62%. Did anything magical happen here? No. How about financials? No, nothing magical there. This was like okay, maybe you're a little bit more balanced there. Discretionary? No, nothing happening here. So the top four quadrant, which represents risk on, is like maybe neutral in one category. Maybe you really argue you're toeing the line there, but it's probably like neutral to bearish. This is a straight up X. This is a straight up X. It's not a risk on rotation. This is still risk off. Doesn't help. Same thing in utilities. Down here, if we jump into the A set, what do we see on this front? Really only still checking one of the bullish boxes here, and maybe you're neutral on tech versus, keep in mind, this is tech versus SHY. That's the equivalent of just dollars cash, right? So, in all of the view that we've seen so far, although I want to kind of like change my tone back to bullish and follow the S&P price action, the weight of the evidence looking under the hood is not really all there. If we look at the B set, gold is still saying like something's wrong. Bitcoin's not really bouncing in a risk-on manner, and the TLT long bond ratio is still underneath the 50. So no risk on from this perspective. Let's jump on into the dollar and rates. What do we have here? The dollar backing off of this top. If this breaks out, that would be a headwind to equity prices. Rates, not really changed too much this week. Once again, I think the market's telling us something here, that growth is more of the concern, and my goodness, the GDP came in slightly concerning. So let's, as a matter of fact, just jump on over to the fundamentals. Let's take a look at the Fed Watch tool here. Fed Watch is still saying about 96.5% odds of a pause in the next meeting, but what I would encourage us to focus on is the update here. It looks like now there's higher odds for another pause in June, which is just a total head scratcher, because the more you think about it now, right, it's like, okay, if you look at other gauges of inflation, I know the PCE came in hot on that Friday session, But if you look at what's actually happening with regional housing data, which is a huge component, like almost, don't quote me exactly on this, but let's just say roughly half. I know it's slightly less, but about half of the CPI print is shelter, right? Shelter prices have been coming down over the last little bit. Rents have been coming down, broadly speaking. So, your inflation argument here for a sustained pause and the inflation boogeyman is just kind of like, all right, that's kind of gone away a little bit, and we're seeing deterioration in the labor market. Like, what are we pushing out odds here for, especially as we're thinking that growth is going to stall out in a big way? I mean, you tell me, are you concerned about inflation ramping back up in a big way? Let's jump back on over to the economic calendar here. As you can see from the manufacturing and services PMI on the Friday 9:45 release, we're still in expansion territory over 50. It's not 50%, but over 50. You could see down here, up here, the GDP comes in, much weaker than expectations. And this is just the advanced. There's going to be 2 revisions to this, right? PCE comes in hotter on the month over month, as well as we don't have it here, but let's go trading economics. And let's just take a look at the calendar, and let's go back to previous week. There we go. Scrolling on down to the Friday session, 8:30. PCE price index year over year, there it is, 2.9 versus the consensus view of a 2.8. And then on the core year over year, just below, 3% versus a 2.9 estimation. Right? So all things considered, a little bit hot there. But as we know, go back to CPI from what was just a couple of weeks ago. Let's go this month. Let's go back to our CPI print. We could probably just filter by red flag events. CPI was that Friday delay. Let's go back over here. Where's the Friday? There it is. Inflation rate, there it is. That's coming in better than expectations on this front. So the PCE was a little bit of an outlier. I know it's the Fed's preferred gauge of inflation, but if you look at the other metrics for CPI, for example, technically the components that matter most are moving in the right direction. So that's just a little bit of a head scratcher here. And the 10-year rate, I would imagine, is agreeing with that. We don't have a FactSet earnings report summarizing last week. I think for good reason. It was like you didn't have too many Mag 7 heavy hitters or anything like that. But this week, it's NVIDIA, right? It's got to be about NVIDIA. Honorable mentions. Let's put some honorable mentions out there. Let's maybe go in the, green crayon. Why not? KTOS, what's going on with drones from that perspective? Interested in that one. Cypher, data centers from old miners. Home Depot, what's going on with the, quote, real economy, if you will. DigitalOcean has been an infrastructure play over the last little bit. For servers, Amer Sports has been the dumb money play over the last little bit. Of course, Meli, Mercado Libre there, Brazilian payment processing. Let's take a peek over at Tempest. Gets an honorable mention. Shout out Kathy Woods, of course. Hut 8 falls into the same category as Cypher. What else? Circle, stablecoins could be interesting there. Trade Desk is dead. Salesforce is dead. We'll see how the numbers come out and if they have any comment about their stock price. Snowflake, same thing. IONQ looks like a better short than anything else. And Pure Storage breaking into that gap overhead could get interesting. D-Wave for the quantum names also. What else do we have here? Continuing along. CoreWeave, absolutely. Rocket Lab, absolutely. Honorable mention. Oh, Marathon trying to become a data center as well. Maybe Dell. Zscaler's been brutalized like all the other software names. And that's pretty much it. Okay. That's the primary look. Again, NVIDIA watch party here on the channel on Wednesday afternoon. We'll watch to see how the earnings numbers come out and more importantly, how the market actually responds to it. Let's jump back over to the platform. Let's finish this thing up. Let's see what's going on here in the long bond relationships. Once again, this is concerns about growth, less concerned about inflation. Let's jump into here and jump into credit spreads. Continuing to just kind of go sideways. That's not really what you want to see. You want to see these things trending lower to actively say that it's risk on. So we're not quite there yet. Let's go to the junk bonds. This is what the bulls need to be hanging their hat on. If you're a bull out there, I know we've talked a lot about defensive data points so far through the sectors, the ratios and such. If you look at the HYG, you could see that we clearly set this higher high here relative to this, right? The market's sort of suggesting, okay, let's get in gear. This is time to break higher. Right? This is what junk bonds are saying in terms of risk appetite. Keep in mind that this is one data point across the multiple that we've reviewed so far today. One data point. If you just go full portfolio based on one data point long, kind of ignores the whole point of the weight of the evidence approach, right? Let's go on over to, well, here's Bitcoin in isolation, but you can kind of just see that it's still weak down here. We'll see if we get an over the weekend bid. Let's go to Breath. Breath really hasn't done anything all that concerning over the last little bit here. RSP even still hanging out near the highs. That's fine. Another metric that you might use here is XMAGs. And I believe, is it that or is it XMAG? There we go. This is the S&P 500 without the Magnificent Seven, right? And you can just kind of see here, you're just right at the all-time high break versus you go look at something like the Mag 7, which is clearly off. And then, of course, your aggregate index still off the high. Anyways, getting back on over to breadth metrics, the whole point was that XMAG. If we go take a look at something like the QQQE, you could see over here that we are just kind of in the midpoint. Like, this is not breaking down aggressively towards the lows. We didn't even test the lows, and we're certainly not doing this. So maybe a little bit of a neutralizing data point for the NASDAQ. I still believe that for now, as a trend follower, I have to be somewhat open-minded to a lower high attempt, although I do look at this and say, okay, is that really just the shakeout low? Is that it? Is that the look below and fail? It could be. All right, it could be on that Tuesday morning session. Same concept that we talked about in the S&P quite a bit. Let's jump on over to the volatility index. Still creeping higher. Another signal that you could use as a long indication is if you break your trend line here and come into 15. Right, that is a possibility as a helping indication for becoming more bullish. If you look at the VIX, volatility of VIX, under 103 would be that same indication. And then let's jump into our vol futures. You could see here that we are still in contango, and the one-day VIX still remains somewhat elevated, excuse me, over here. What about and so the general takeaway here is just that, like, okay, not the end of the world, right? Things can still get worse. If we break underneath and make a new low in the broad market and vol futures do not get into backwardation, if we do not see this on a new low, I would be bullish about look below and fail again being the dominant theme in the market. Let's jump into our skew because it helps us with a line chart. Small uptick, people buying some insurance, but P-call is the better indication over here with quite a few touches this week higher in the range. And remember that the closer you get to 1, the better this is as a bottom finder rather than a top finder, right? So this tells us that everybody's all hedged and everybody's protected, market makers, and forget about the us versus them argument, but just generally speaking, if that's the consensus view, right, oftentimes that gets faded. So if everybody's all bared up and, oh my God, we're buying all these puts and there's equal amount of puts versus calls in the system, is that really is the obvious thing going to happen? Well, I guess not, right? In hindsight, we could see here that this week actually did go for the look below and fail, right? So let's just reset this. Let's take a tour through our core list of companies and let's see what's going on with NVIDIA up first. So it, of course, is the one name to rule them all this week. I would say for now, it's just in isolation, a little bit constructive here. I don't know that I'm going to be overly active on NVIDIA. They do have these new expirations available, right? You could see here, jumping into next week, you have Mondays, Wednesdays, and then Fridays. So keeping an open mind to being able to trade the probably Monday expirations early on. Even the Wednesdays might be all right ahead of earnings. Technically, they expire before the earnings actually are going to be released, right? So maybe it's tradable from that perspective. To me, this is the obvious break point up and over 192.85. Do we get a positive catalyst on earnings that looks like this into the end of the week? If so, bullish for the broad market, and you probably want to participate there, right? That is certainly an opportunity considering we've just been sideways for so long. If the Jensen comes out and says something miraculous, if we're just still sideways in this range, I might be a little bit less enthused about actively trading NVIDIA in this box here. So really, it's either go for it and we're here trying to make it back to all-time highs, or disappointing and let the noise build out, and then the short is probably on that higher time frame weekly looking for the neckline break at some point in the future underneath the daily 200. If we gap down on earnings here, yikes, any rallies that fail, short back through and probably targeting this gap close first, and we'll walk down new targets from there when appropriate. Let's jump on over to Apple. A bit of a confusing, maybe not confusing, but just a bit of an unexpected day there on Friday, rallying back so hard after gapping down. And, previous days had rejected the 20 and the 50. It's not really what I was expecting, honestly, out of Apple into the Friday session. So for now, I would say maybe if this is going to be double bottom, the next long is over the 50, something like that. And there's an opportunity here on a higher low over 266.15. That's a possibility. If you're just consolidating here and drifting back into the low, let's not call it anything other than what it is. You're in a bear flag still. Let's jump on over to Microsoft. I think for IGV, this is still just pressuring that very firmly to the downside. You have just a very clear, right, flush point. So underneath 393.25, market may continue lower here out of Microsoft. The chart looks absolutely ugly, ugly, ugly. I just continue to come back to the same point, which is just I don't know that I want to be a short in here. I would rather look for the excess low that then reclaims and then starts to make a move in the upward direction. right? Finding a more firm low out of Microsoft with an excess to complete the auction on the downside, right? So that's still my take there, and that hasn't really changed. On Amazon, I think that this is absolutely strong here, much stronger than some other charts. I mean, look at the inside day breakout. It caught some upgrades on the Friday session. It's over the inside days closing there. It's testing this earnings gap above. I think this is just the next watch, right? Do we get over 212 into the earnings range? If we just consolidate here, let it turn into an hourly bull flag, and then we're higher still. If we rotate underneath this 205.40 back to neutral and just waiting patiently for the next setup. Not much to really do in the midpoint of the range. Let's go on over to Google. Strong day on that Friday session. They released this week the Gemini 3.1 model, well received by the market, up and over that 310.50. I mean, I have to give credit where credit is due. Is this going to get back into gear as a leader? Possibly. So any higher lows that then continue, I would look to get involved on higher lows over 310.50 primarily. If it dips back below that, be a little bit more concerned and open-minded for this developing bear flag on the daily. That would be a TBD situation considering the strength of Friday. If all of that fades away and we're like in here and just weak, I would just be open-minded to this, continuing lower over the span of time. Let's go on over to Broadcom and see what we've got here. It looks just absolutely terrible. Horrible with those upper wicks, but what I continue to come back to is just the fact that on Tuesday's gap down, we'll go to the hourly chart for this, there was just no attempt from the sellers to substantially produce lower high and continuation to or through the daily 200 SMA. You can see we're riding the 20 just like we're rejecting the 50, so you got to give credit on both sides. I think this is the danger zone. I think this could open the door for a short-term short through the thin structure, and then we'll reevaluate. If we just get this, it's becoming a little harder to get compelled on the long side because the 50 continuously moves lower, right? If the 50 was still up here and we still had this as a possible range, let's say from A to B or B to A, however you want to classify it, then fine, that's a different story. But the 50 SMA is just going to be slightly lower on Monday and then slightly lower on Tuesday, right? So it's kind of hard to justify a big long opportunity as the target technically gets lower. Let's go on over to the metaverse and see what's happening here. Strong day on that Friday session, poking up into the 50, not able to close above. I just don't like this segment of price action in here. I don't like the 20, the 50. It's kind of loose. I don't see this as being a clean opportunity set yet on the metaverse. Kind of patience and hands off on this name, and it's been that way ever since that. There's that one breakdown in here that was real nice. It's kind of been a lack of opportunity in my view ever since. Maybe into the earnings gap here was decent for some folks, but I don't see it in the moving average cluster right there. So next, Tesla, another one. I would like to be constructive at some point on Tesla. I just don't see it still. Inside bar there, could you get long over the inside high and look for a 20 SMA reclaim and, move to the 50? Probably. Could you then look at it in hindsight and call this as a higher low? Probably. And then does this turn into a double bottom? Probably. And then over the 50, you get a little bit more interested. You could put this on, but just don't be, you can't be shocked at all if the market pulls back even just a touch and then this is like here, testing these lows again, or it's a big upper wick and it comes back in the next day and your side, it's just, you've not been trending cleanly other than down in Tesla over the last little bit. So looking for this bottom is a little tricky, and I'd want to see a bit more confidence before ultimately getting involved. Let's jump on over to JP Morgan. I think for financials, maybe a little bit of a higher low action happening here, but still undoubtedly a lower high there. Just neutral at the 20 SMA. If we do get to the top end, this is where I'd become a little bit more bearish just for simply a range high rejection. That'd be at 318.50. So a rally to get there is like, I would let it go. And then if we are here and there's a no-brainer, then maybe. But JP Morgan's a slow trader anyways. It's more of just an indication for the XLF. Palantir, like Microsoft, just a little tough to get involved short on the lows still. I think you might pinch this up and over 136. This one actually is worth looking at on the hourly chart. So you have this big reversal and rollover on the Wednesday session, 2 days sideways. I think you could probably put the pressure on the shorts. Anyone who continuously tries to jam this thing on the lows over 136. I think there's likely a trade early in the week that looks like that. So Palantir will be a top watch early on Monday, maybe even Tuesday, depending on what happens on Monday. If we're just in here, less interested in actively doing something on Palantir. Let's jump on over to AMD. You do have your range low support in here that's stepping up. Pretty ugly close on Friday with everything else rallying and closing strong. AMD just could not keep it together. And take a look at this afternoon sort of route back to the downside. So you still got this 3-day balance range, no hourly high or low above yet. I'd be very neutral through here. I'd be skeptical of the 204 considering the reversal on Friday. Just not what a relative strength name should look like. There was relative strength back through here that completely fell apart post earnings. And we'll see what's next. For now, It looks weak to me. It looks like bear flag consolidation. It looks like it might need to test the 200, look below and fail, and then it goes, right? Maybe that's the configuration we need. Maybe we need some kind of NVIDIA sympathy move over here on AMD. But just as it stands right now, really weak action on Friday, noting that failed move over 204. Robinhood, what's going on with this one? I think it's a simple watch for let the inverted head and shoulders build out that long right shoulder, and then maybe we're an earnings gap close here. I know I might sound like a broken record on all these names that were really in aggressive downtrends post or pre-earnings. Your high beta names, Palantir, Robinhood, even Microsoft for what it's worth. I don't want to get new shorts going on down here. I know it's a bear flag, absolutely, but I would be more interested in the earnings gap close, set a lower high at the 20, and then roll over, right? I don't want to be getting short on Robinhood, and I said this in the Wednesday and even I think last Saturday's video. I don't want to be getting short into this prior high. Why do I want to be getting short here? The time to get short this thing is like here, when it's breaking the neckline, when it's breaking weekly trend. So that's my 2 cents. I would be looking for counter trends on Robinhood and Palantir for that sort of logic. And let's just reset this and get into our 7 additional ideas. Let's start with some boring ones, and then we'll get to some more interesting ones. EQT is going to be the first up. This is a natural gas name, and earnings were, I believe, they should have been last week. I don't know why it's not showing the number there, but if we can get some sort of Brigade bolt up and over 61.15, you should probably, if you're going to actively trade this, just do the diligence. Let me actually do it with you right now. Did they or did they not report earnings? EQT earnings Q4, because if they're bumping earnings further out, then we need to know that. Let's see. I'm going right to their investor relations website. I should have done this beforehand, but we're doing it now, which is all right. Earnings release Q4. They did release them. So earnings are out technically, and it doesn't look like we have to. It looks like just a glitch on Thinkorswim, perhaps. Just need to double check those things, because if you try to trade this thing straight into earnings, and you're like, what the heck's going on here? Anyways, 61.15 up and over the level. This is a weekly consolidation breakout. Natural gas possibly as a fuel for AI data centers. We shall see. EQT, first idea on the list. Brigade bolts on the daily. Let's go back to that EQ2. There we go. Up and over 61.15. All right, good, done. Let's move along to, let's go ABBV. Let's stay boring before we get more interesting. And you can see here that we've got this really tight inside day on that Friday session. We know that the healthcare sector looks pretty good right now. If we could get a move up and over the intraday high, that sort of 226.75, here we go. If we could get something that looks like this on the early parts of this week, I would start targeting this high up here. Just a nice hold of the moving average stack right there. We know the XLV looks decent. Let's see if ABBV wants to play nice. Speaking of which, you could just trade the basket XBI. Not that ABBV fits directly into this, but you get the idea. XBI, nice hammer candle there. Look below and fail on the 50. If you take Friday's high, you might have something to do here. You could use LABU. LabU is the levered ETF for these biotech. So if you're interested in the healthcare and the drug makers, I would go with the basket, not individual single stock risk. This was an idea as well from the Wednesday video as a little bit of an update. Let's move a little bit more exciting. CRDO, it's not the greatest look. What I think is interesting here is the neckline of this mega sort of like distribution pattern. Call it a Man Ray pattern, Brigade bolt lower high on the weekly time frame. You lose the 200, and I think you're probably headed through some of this thin structure back off to the lows. If NVIDIA earnings go well, this could change the look of CRDO's chart quite a bit. But for now, to me, it's just like highs, lower high, underneath or near the neckline of the formation after a lower low. Is this just going to roll over and head back down to here is the main look, and then drift into a stronger stage 4 downtrend for a potential short on CRDO. Let's get even more exciting. Let's go on over to Coinbase. We're creeping our way towards some high beta stuff. Coinbase, inverted head and shoulders there. Let's see if this can get going up and over the neckline. Again, crypto would need to get in gear over the weekend, so we shall see. But coin, if we could stay over 169.50, take 20, we have thin structure to retrace back through. I'm really interested in possibly getting some exposure, be it through crypto outright or coin or strategy or something, for this inverted head and shoulders. Absolutely noting that it is underneath the 200, underneath the 50, and just interacting with the 20. You're really bottom fishing here, but I think that you could probably put it on with tight risk if the setup is correct for a potential squeeze. What makes me interested is this thin structure, right? If this was all overhead supply and just like gnarly price action back over here, not interested, but because it's so thin, captures my attention. Let's keep going. Let's go KTOS. Let's get a little bit more high beta. Let's see what's happening here. I'm curious to see if we overshoot, look below and fail on the daily 50 and reclaim the daily 20 over 99. It did display some relative strength this week. Take a look at the Tuesday, Wednesday, Thursday sessions. Really strong. I mean, this is no joke of a move from 87, let's call it 87, up to in here at 105. That's no joke of a move. So if we can get this and then kind of like get back in here over the double bottom neckline on the daily, I'm interested back over 99. Now, keep in mind, earnings this week can dramatically throw a wrench in this, but for now, KTOS is back on the radar. Let's get on into some memory names. SNDK is going to be first up. Again, note the relative strength, riding the daily 20, coming into a flat top high, 652. Can we Brigade bolt here back to all-time highs? Look no further than a WDC. This is still in range. Can we retake that 293, get back to all-time highs? Look no further than an MU, which of course is also really strong here. Take a look at that. Of course, this is the main look in, I would say, the SMH anyways. The inside bar did break meaningfully on the Friday session, and technically I'm sure a lot of folks are long on that. So can we do this into blue sky territories, basically over 440, and get this moving again in the upward direction, and then STX for the memory complex as well. What I would look for here is a look below and fail. If we're going to get long STX, it has to be, excuse me, on a little bit of weakness first underneath 398, and then back into the range to reclaim it. Right, that's STX. So let's get on into now some of the even more interesting stuff recently, at least. LITE looks just absolutely killer here. Any sort of pullbacks over the prior all-time high. You've got bull flag breakout happening in there. I mean, really stable stuff over 600. If you could pull back and stay over 600, you're kind of looking at first flag pullback retest after, maybe that's, I guess, a little bit more of your first flag here. But anyways, looking for potential pullback longs off of that level. I don't really think that you should be buying it here, this extended from the 20, never mind the 50. But if this could pull back and just sort of set up one of these, right, and then get going again, it's obviously a hot theme. It remains hot. It's trading at all-time highs as the market's lagging. Look at an AXTI. This is really where I think there was more opportunity here. Into the end of last week, there's your Thursday session. They had earnings Thursday night. You open above, gap fill reversal, and now out to new highs. So let's see if this one wants to produce some kind of a setup over 2830 for continuation on that. Let's go CIEN. In the same space here, all these optic names, right? Pull back higher lows, any consolidation sideways, keeping an eye on this stuff. And then lastly, GLW Corning. It's not necessarily in that same group, but nonetheless, the chart looks fantastic. First day out of a bull flag on Friday. Let's see if we can get some continuation out of this or a check back and then continuation over the span of like an intraday 5 or 15 minute pullback, right at the prior day high, basically. So that is ultimately what we've got going on in the market. Those were a couple of the hot groups that remain interesting. And I think the main point of the exercise as well is to just say, like, although Palantir got brutalized the last couple of weeks, some of this high beta stuff is absolutely still working. There are still leadership pockets in the market that are, somewhat telling in terms of where is money sort of going from a speculative perspective, right? Are people getting involved in these names again? And I mean, you may or may not, I would consider this momentum, not necessarily speculative. I would call quantum computing speculative, right? Some of these nuclear names, like the Oklo, for example, speculative. But Corning, I mean, that's a momentum move, and it's getting dollars. I mean, look at the volume here post-earnings, right? People are absolutely getting involved in that. That would seemingly indicate that there's some degree of risk appetite that's increasing, right? So just calling that out. Another place to look would just be like, go look at your Planet Labs, right? Really nice week here over the first 3 days. A little bit of a pullback on Friday. Rocket Lab has earnings this week. Not quite as good, but I mean, it performed somewhat percentage change wise. It was an okay move through here, just kind of failing that key structural level. So point of the exercise is to say that the market's not completely dead. There are some pockets where things are working, primarily those fiber optic names. And in the meantime, the index is just kind of going sideways for it. NVIDIA holds the keys in terms of what happens on Wednesday. And of course, we will be streaming that live here on the channel. We will be streaming every morning live at 8 a.m. Eastern time, as always, for another episode and installation of the pre-market prep. If you enjoyed today's video, then let me know down below in the Let me know down below in the comments section or by giving the video a very simple thumbs up as I babble over my words. I hope you have an awesome weekend, a fantastic and green trading week upcoming, and as always, I will see you in the next one.